Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. Trump's tariffs are bringing back the same level of global uncertainty as we had from China's pandemic. This time, however, officials in charge lack the credibility or the instinct to change public policy for the common good, or the courage to withstand the nutters. In fact, the nutters seem to be in charge of this latest mess. However, their tariff policy took a jerk overnight, with the US announcing a 1-month delay to the start of them against goods from Mexico. Meanwhile, Canada released the list of products that they will hit with counter tariffs for the US products. Probably more importantly, there is widespread evidence Canadians are already boycotting US products, tariffs or not. That will have more immediate impact than official reactions. But the effects have yet to show up in the data. And there was a lot of PMI data out today for surveys that predated the tariff news. The ISM factory survey for the US rose to a modest expansion in January from a downwardly revised small contraction in December. In Canada, their factory expansion slowed slightly in January, but it is still at a level higher than either of the US surveys. Although the internationally benchmarked China Caixin factory PMI slipped to a no expansion, no contraction state in January, the underlying data did feature a rise in new orders. Prices there eased at their fastest pace, though, since July 2023. Looking ahead, it will be difficult now, given the unknowable impacts of the impending tariff war. EU inflation in January rose marginally to 2.5% from 2.4% in December. What is interesting about this is that this is the first where energy prices weren't the restraining factor they were in 2024. But it is the 3.9% rise in services costs that is keeping this elevated. Retail sales in Australia fell 0.1% in December from November, the first such retreat in 9 months. And staying in Australia, CoreLogic reported that Australian house prices and sales activity were weaker than usual in January. They had a 0.2% price dip in January, the same as December, and the fourth consecutive monthly decline. Annual price growth has continued to slow, dropping below 4% now. The US Treasury 10-year yield is now at 4.52% and down 2 basis points from this time yesterday. And the price of gold will start today at $2,817 an ounce, up $18 from yesterday and back to a record high. And oil prices are virtually unchanged again at just on $72.50 a barrel in the US, while international Brent price is still at $75.50 a barrel. And the Kiwi dollar is now at 56 US cents and down 40 basis points from this time yesterday. It fell 60 basis points lower during the day, but recovered some of that. Against the Aussie, we're now down 20 basis points at 90.5 Australian cents. Against the euro, we're down 10 basis points at 54.3 euro cents. That all means our trade weighted index starts today at just on 66.7 and down 50 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.